Hey everyone, welcome back to Weekly Market Outlook. This is for the 25th of November 2024. Obviously, this is going to be the last week of November, and just to keep in mind, Thanksgiving is actually going to be on Thursday, so I think market is actually going to wind down a little bit. So there's, kind of expect a little bit of a thin trading going forward into this week. All right, let's take a look at last week. So we have the RBA meeting minutes. I think in terms of the RBA meeting minutes, it was kind of a little bit more of a hawkish tone. I think there was no real concern in terms of the RBA cutting into their interest rates too quickly there. Again, we have the Canadian inflation numbers. It does pick up again, up to 2%. UK inflation has also picked up very significantly as well, 1.7% to 2.3%. The Japanese inflation rate still above 2%. This is now down slightly to 2.3%. But that's pretty much it. In terms of last week's number, obviously the manufacturing numbers was kind of a huge mover in the market. We do see the manufacturing numbers not really improving significantly as well, but the German numbers there was a little bit of an improvement compared to the consensus, as well as the previous number at 43, but just slightly to 43.2. All right. This week, a lot of focus is definitely going to be on the FOMC meeting minutes. That's going to be on Wednesday. It will be on Tuesday in the US. It'll be Wednesday in some parts of Asia. If you're in Australia, it will be Wednesday morning there. The FOMC meeting minutes is going to be released there on Wednesday. And then we have the inflation numbers from the Australia, as well as the PCE numbers from the US. That's all going to be released on Wednesday. This is the day before Thanksgiving. Thanksgiving is going to be on Thursday, which is the 28th of November. So we do expect thin tradings going forward into this week there. Again, we're going to be looking at the flash inflation numbers for the Eurozone. The expected inflation is to pick up from 2% to 2.4%. So I think globally, I think we are all looking at about the same story here, where we see the inflation kind of picked up a little bit, but not really a major concern that inflation is going to rise up significantly. So I think in terms of monetary policies across the globe, we are still going to be looking at a little bit of the interest rate being cut for 2025. Although, in terms of how aggressive that cut is, I think the market needs to kind of take a step back and not anticipate too much of a huge cut in 2025 across the world. All right. So let's just jump into the Australian dollar here. So again, for Monday, we saw the market gaps up significantly. This is again on the selection of the new Treasury Secretary in the US, and we can see the reaction there. We do see the US dollar kind of wind down a little bit, but a very sharp sell-off again from that gap opening. So I think we're going to be looking at that gap being filled. Again, if we take a look at the positioning here, where was that gap from Friday's close? For the Australian dollar, it's actually going to be around the 65 cents mark. That's basically where the pivot is going to be, about 64.96, basically around 65 cents. So we do anticipate on Monday, price comes back to 65 and potentially test that as a support there. We might see continued recovery here for the Australian dollar there, but I highlight a very specific level for this week to watch out for. That's actually going to be about 66 cents, where the R2 on the weekly pivot is located, and it's also where we find that confluence with the 61.8% Fibonacci retracement on the Aussie USD here. So with the Aussie USD, generally I think we're still going to be looking at a little bit of a downtrend here, but with Monday's movement here and the gap higher today, and we're anticipating that price is already trading above the pivot level at 65 cents, we might actually see a little bit of a recovery for the Aussie USD here, at least if it maintains a position above 65 cents. Okay. R1 weekly needs to be broken, 65.50 needs to be broken, but ultimately we're going to be looking at 66 cents as potential cap for the market for this week here. So any recovery on the Aussie USD is likely going to be capped at around 66 cents. That's where we might see some profit taking happen. We might see sellers come into the market there, but again, to The key level to watch out for this week is definitely 66 cents. So if you guys are looking to trade the retracement this week, just make sure that's going to be a target level for the Aussie USD. All right. Euro USD, we have broken below that 1.05 level here, and we can see that push lower there towards the end of the week. There was a very significant sell-off there. That's basically on the back of the PMI numbers in the Eurozone as well. So we saw that push lower. We find support at 1.0350, and price kind of immediately pushes back up above 1.04. Market kind of gaps up a little bit again above the pivot level, which is above 1.0450. So I think where we are right now for the Euro USD, with obviously testing that 1.05, 1.0550 as a resistance, continued failures at this level, then yeah, I much prefer to keep a short position on the Euro USD again, considering that we are anticipating the US economy to be stronger. We are expecting the tariff to be implemented. We are expecting a potentially stronger US dollar. Compare that to the weaker Eurozone economy here. We're still expecting that push lower on the euro at this point in time, but where it is right now, it is obviously testing 1.05 to 1.0550 as a resistance. So definitely wanting to watch out for this level here. Any rejections at the current price level, then we anticipate further sell-off on the Euro USD. All right, for the Pound USD, we found support last week at 1.25, exactly at the order block that we talked about. So we saw that bounce on the Pound USD. So this one here, right now, is a little bit too early to tell whether or not we're actually going to be testing 1.25 one more time, or are we actually going to be looking at a little bit of a retracement happening on the Pound USD. But if price is able to maintain the position above the pivot level for this week, and definitely want to watch out for if it's able to kind of transition back up above the resistance one, and that's actually very specific at 1.2660 level. If we're able to close above that 1.2660 level, and we might actually correct a little bit higher on the Pound USD. Where we are going to be looking for that correction, we are currently looking at a move potentially back up to 1.28. You can see once price transition above 1.26, there's actually not a lot of resistance for the Pound USD until about 1.28. So definitely something to watch out for. Right now, because we are closer to support level at 1.25, I think we might actually see that bounce of 1.25 confirmed from last week. We might actually see a little bit of a correction higher here on the Pound USD. Obviously, the limits, first one, the resistance that we're going to keep an eye out for is now definitely 1.2660. But once it transitions above 1.2660, there's actually not a lot of resistance until about 1.28. So this is something to consider for the Pound USD. Now, next is the dollar Japanese yen. Dollar Japanese yen, a couple of things to note here. We are not really moving away from that 154.50 155 level on the dollar Japanese yen. In fact, price is currently back at around those level again. So we're potentially looking for that retest of 155 one more time. And there's also a minor support trend line that's highlighted on the screen here. You can see that blue trend line that we have here on the dollar Japanese yen. I think that's the kind of the last support trend line that we have on dollar Japanese yen. So any strong push lower at this point in time, if we take a look at the confluence in price, that's basically any push below the support one, that's below 153.35, that could send the dollar Japanese yen closer to 152 in terms of a deeper pullback here. But again, since we're so close to that 155 resistance level, any transition above that level above 155, then we're likely going to be retesting 156 and 157 again on the dollar Japanese yen. So this one here is actually going to be a little bit of a tricky situation for the dollar Japanese yen. If it breaks lower below 153, then we are likely going to be testing support at 152 all the way down to 150. But any transition above 155, then we're likely going to be testing resistance back up at 157 here. So that's for the dollar Japanese yen. So in essence, what we're going to be looking at for this week here, we are concerned about that potential thin trading environment that we have because of the Thanksgiving holiday that's going to be in the US. And I think a lot of traders are already in that holiday mood this week. So market can be a little bit more on the volatile side. And in terms of whether or not the dollar strength is actually sustainable, we're probably going to be looking at a little bit of a mixed signal here amongst the four major currencies here, with the Aussie USD and the Pound USD potentially leading up to a higher correction. The Euro USD likely going to be a little bit more pressured here, especially with price below that 1.05 level. And the dollar yen here, obviously this is a little bit unknown. We do have that minor support channel that we have here, but it's not really a strong support channel to say, all right, let's go for a buy here and aim for a break above 155, because any move above 155 is still going to be limited towards at about 157 in terms of resistance. All right, so with that, good luck with your trades, and I'll see you soon.